think the Fed is going to do from here?
I think a lot of it is going to be where the economy is. How are things going? It seems the economy is doing very well. So if the economy is doing well, it's hard for the Fed to lower rates, right? The only reason they might lower rates is if there's pressure on the economy because they want to keep the economy going. I think, as we know, President-elect Trump will probably voice his views on that as to whether the Fed should lower rates or not. But I would tell you right now it's going to be a little bit harder for the Fed to lower rates if the economy is doing as well as it's doing.
Are you rethinking your own view on what the Fed will do versus, say, what you thought maybe 6 months ago? Right, the economy's certainly proven to be more resilient than people thought. The chair himself last week called it remarkable. I'm not sure people expected it to be as remarkable as it is, so maybe they thought we'd be cutting more now. What's your own view?
I think the economy's done a lot better than I thought and that most people thought, and that's great. I mean, you actually want that. The one thing I would tell you Chairman Powell would be worried about is, will inflation come back? So you don't want inflation coming back, and one of the ways you can make sure that doesn't happen is by leaving rates where they are. It's actually why you're not seeing the Fed decide to lower rates. They're nervous that the economy is doing well. That's all positive for Americans, but they're going to wait and see.
Are you, when you look at the road ahead for interest rates in general, are you in the higher for longer camp because you believe some of the new administration's policies are going to be reflationary, that they're going to cause inflation to actually remain a little sticky, if not higher than people were expecting?
It's a hard question. The reason is because personally, for me and for the firm, higher interest rates are better, right? Because it means that people have a harder time borrowing money. They need capital. Capital isn't easy to get. So that's good for our firm. And
your rate of return on the lending that you're doing is higher in a higher interest rate world.
Yes, it is. So for us, I like where it is. For the American people, you'd rather have lower interest rates because then it's easier to borrow money when you're getting a house or anything. So you want lower rates for people, but for businesses right now, for us, it's actually great.
The idea of deregulation in a new administration would theoretically free up the banks to lend in a way that they really haven't been able to in the last, let's say, handful of years. How do you think about a new competition coming for what you do from the traditional financial institutions, not the shadow banking system, if you will?
I think that's the biggest risk to our business. And I think to all the businesses that are on that shadow side, because that business used to be dominated by banks. It was all asset-based lending, and banks have a lower cost of capital than we do. So if banks start coming into that, I think that actually would be great for businesses, right? For companies. Mm-hmm. It's not great for us, but if banks come into that market, you're going to find that actually the economy is going to end up doing a lot better simply because people are going to be able to borrow at lower rate.
What's attractive to you now in a world where valuations seemingly of everything have gone one way, and that's up to the right?
Right. So you're right about that. So what you really want to do is be invested. And the reason you want to be invested is because there's a lot of capital coming in, and you're going to see more private equity capital coming in. You're going to see more people getting involved. So I think for us, what we're just trying to do is find interesting deals where we think there's a huge amount of upside and where there's media deals coming up. So you're seeing that in a lot of leagues in soccer in Europe. You're seeing it same thing here. So I think for us, we're just trying to find things where we can invest.